So in today's video, we're going to look at how we can use that simple break of structure to find those areas of supply and demand to make it easier for you to draw your zones. Now make sure you watch this video as I have a special Black Friday offer on right now, which is going to allow you to get access to the supply and demand and money management modules within my Forex Masterclass course. So let's look at this chart on the DXY, and we're going to go through how you can simply use that break of structure to look to mark your areas of supply and demand. It's going to make it so much more simpler for you to mark those zones, and believe me, you're going to find it an easy way to start looking for those entries. Now, when we're doing this, you understand the use of the break of structure and understanding the use of that change of character hopefully as well. Now if you don't, there is a video which at the end of this video it goes through the difference between the two, because you really need to understand the difference between the two when you want to start using those for your entries with that change of character. So let's look at this area. We're going to start from this low in the market. We're going to start from down here. I'm going to go through this chart quite quickly to show you how easy it is to mark out your areas of supply and demand using this technique. So we're going to look at first where we see a minor break of structure here, to then we see a major break of structure. Zoom in. So once we see this break of structure on this bullish candlestick, we then have an area here we can draw of demand. That's my first demand zone. We can see the market breaks up, pulls back in. We have a manipulation on the lower time frames, and we continue higher. That's the first area. Once we see this, we can see the market continues up and we pull back. This then becomes my next high in the market. That's our breakout. Again, we mark out our area of demand. There's my area of demand. The market comes back in and we continue higher, and we have another breakout to the upside. Once again, we can look for an entry down here, manipulation. Understanding all that is going to help you to find those trades. So again, we continue on. We have another break of structure. We have another area of demand we can draw. Okay, we do actually break through that area, whether we draw it from the open price of this candlestick or we draw it from the high, that's totally up to you. We do come back, we have another rally up. Once again, there's another break of structure. Very hard candlestick to use for the area of demand, so we're probably looking at this whole zone, and eventually we can see we break through, removing that area of demand. Now this video isn't ready to go through where we're looking for the entries, but you are going to lose even using this strategy. But when we see this reversal, we create an area here of supply. Change that. So the market then continues to drop. We have another break of structure here in the market, and we create another area of supply. We break through, reversing our market where we see the removal of this high. Draw this out, we have another break of structure right there in the market. That leaves another area of demand. So mark that out, area of demand, we can drag that across. We then continue up, breaking structure. We get into this high, we can mark that out, it's a new high. We do break with this wick and we close through with this candlestick. So I'm happy then to draw this out from the low of this move here as an area of demand. The market comes back in. This is what I call a tested zone as well, and we can see that the market breaks below. There's a manipulation. Again, we're not going to go through entries to show you how to quickly mark out your zones on the chart. Again, from this high, we have another break of structure, leaving another area of demand here in the markets. Whoops, let's mark that back up, and the market continues higher. And again, you can see we have another break of structure there. And this big candlestick becomes my area of demand. We do pull back to it. But before that, we do have another break of structure, leaving this area here of demand, which gets removed. When we see that removes these lows, which is structure in the market, leaves an area of supply. Okay, and the market then continues to fall. We have another break of structure here, leaving an area of supply here in the market. We also have another break of structure right here. See how quickly you can mark out your zones Just mark this off this high. And then eventually the market comes back up, makes a higher low. We then break and remove this area of supply. Now that is then another break of structure here, which is leaving this area here of demand. Mark it out as demand zone. That is the zone what broke through. Okay, we do have a smaller zone here, but this is the zone what broke through this area of supply. The market then eventually breaks this area. So you can see the market comes back up. We have a false break through the high of zero supply. We fall back to zero demand, another pullback. Okay, now why does this happen? Because we have this low here in the market is a breakout, leaving this area here of supply. So very quickly we can mark these out once we start reading the break of structure. Another break of structure there, move it across. This is an area of supply. Okay, so we wick through that one. That's just going deeper into this area, which is in fact then a tested zone. We have a tested level right there. The market continues to go down at this point. We have another break of structure right here. That leaves another area of supply. Again, you can draw it from the body or from the wick of that zone, whichever you prefer. And then the continuation to the downside, once again, we have another break of structure here. That leaves me another area of supply. I'm just probably going to draw it from these candlesticks. Okay, so the market drops down, pulls back. And this is the last low. Okay, so this is the last area of supply. We get a breakout again. Now what breaks it is this area of demand, but we have this area here of demand as well. So I'm most probably going to use the whole zone. Okay, then the market comes back. We have another break of structure here on this candle to the upside, which then leaves this area of demand. That gets removed. As that's removed, we create this area of supply. And yes, we can see that the market is bouncing between these zones. We're having some losing trades, but we're not going to win on every trade. We have a small break of structure here. After we break then this major structure break of this level, okay, and removing that area, that leaves an area here of supply. Market comes back up, and once again we have another break of structure here. Okay, we have a small break of structure, which is an area of supply, but because we have an area of supply above, we don't need that on the chart. We can see that this area of supply is removed straight away. We pull back into that supply zone, we drop out, and we leave this area of supply as we break this structure. So now we're just waiting for the market to pull back. Now we have a big area of imbalance. That is on another video. We can understand imbalances. There's plenty of videos in this channel, but this is the simple procedure using that break structure to draw your zones. Let's now shrink that chart back out. We quickly went through from this low. We can see where these areas of demand were holding. With this area of demand has been broken, and we have this area of demand where price is now just about breaking or bouncing off there, nearly broke it. Okay, we had this area of demand as well, which, let me just quickly go back in. This is a tested zone, and the market went deeper. We got a reversal. So hopefully this technique will allow you to quickly find your areas of supply and demand. Now, if you're not sure about the break of structure and the change of character, now the change of character is the confirmation entry. When we're looking for entries off these zones, we're either looking for that set and forget strategy or the confirmation entry. Now, those are all in the channel. Coming up at the end of this video is that video going through the change of character, or the difference between the break of structure and the change of character. But if you want to fine tune your trading further, like I said, I had a special Black Friday event, and that's going to allow you access to the Forex Masterclass course, the first modules. Now inside this Masterclass course, the first modules, you're going to have access to the supply and demand section, the money management section, and we go through some live trade examples. All of this is in a special Black Friday event. I've allowed anybody access to the core content of this course for this Black Friday only. Now the link for that is below in the description of this video, so you can go and check out exactly what that offer is. But I've basically allowed anybody who wants access this coming Black Friday, access to these modules, so you can understand how I use supply and demand and market structure. There's top-down analysis, there's understanding of the fresh and tested zones. You've got the set and forget strategy and the confirmation entry. Now the confirmation entry is that change of character where you're looking for those lower time frame entries. The understanding of qualifying the zones was going to help you greatly as well. All of this, including my money management, is right now available if you click the link below in the description of this video. But if you want to find out more on that break of structure and the change of character, what the difference is between the two, then watch this video popping up right now, because that is going to help you understand what the difference is. But then don't forget to check out this special, because it's only going to be up until Black Friday.